All right, everyone, so I hope you guys are all having a great weekend. In today's episode, we're going to go over my game plan for the week ahead. We're going to finish off the month of July here. We've got 3 more days. I want a strong finish, and I think we've got a good chance at that because this market has been really hot. I have been so surprised by the degree of momentum we've had. Just in the last week, we had at least 3 stocks, if not 4, that went up over 600%. I couldn't even count the number of stocks that went up just 100%. This is some really frothy momentum. But you know what? During these markets, it's not impossible to take some big outsized losses. I've had a few of them myself, and if you're a trader that's caught a few of those losses as well, I don't blame you. Because here's the problem. You've got big momentum, you've got lots of volatility, but if you choose the wrong stock or you choose the wrong entry, that big range, you're in on the wrong side of it, and the losses are big. So I want to walk you through what has been working in the last few weeks, but more importantly, what has not been working. So hopefully it can help get you back on a solid track for the rest of July and hopefully get you off to a solid start for the month of August. Now, I'm going to put a link in the description for a 2-week trial at Warrior Trading. If you haven't already done one, make sure you check that out. That link will be posted in the comments in the top of the description. So you can check that out. And during that 2-week trial, you'll be able to trade side by side with me. You'll be able to have access to this platform right here. You'll have the scanners, the charts, my chat room, my live broadcast. And as always, I'm going to encourage you during your trial to trade in the simulator so you're managing your risk. While you're learning a new strategy, you don't want to put real money on the line, so take it slow. This is a marathon, not a sprint. The market will be here for you. But if you want to start learning and you want to immerse yourself in the community, check out those links for the trial. All right, so when we look at the month of July, like I said, I have been blown away by the degree of momentum we've had. It really kind of it feels like it came out of nowhere. You know, you sort of look at my P&L for the last 90 days and it was like, sort of like chugging along. And then all of a sudden right here, it was like, zoink, big squeeze. So what happened here? What was the catalyst that began this move? Well, if we go back, this was July 3rd. And what happened on July 3rd, I'll pull up my calendar here for the month of July. July 3rd, right here, was KOSS. KOSS. Out of nowhere, there was a thread on Reddit that kind of revived this stock that's been out of play for quite a long time, but was in play, of course, during the COVID era and the GameStop short squeeze. And on that one basically Reddit thread, it goes from $4 a share to almost 20. It was explosive. And you know what? I didn't make as much on it as I coulda, woulda, shoulda. I wasn't fully prepared for it. And I think a lot of traders feel that way, and a lot of shorts probably weren't prepared either and got wrecked on it. And so that was the beginning of the month. It was just such a strong start. And then we went right into ZAPP, ZAPP, right? ZAPP ends up giving us multiple days of momentum from July 3rd, 5th, 6th, 8th, 9th. Just goes basically from $4 up to 20 as well. So, you know, then we get this really big move on ZAPP. And then after the move on ZAPP, we get this move on, I think it was MIRA, M-I-R-A. This one, oh no, this was just more recently. Let's see, we had SNGX. I mean, it was just like back-to-back huge momentum stocks. SNGX goes from $2 to $15, $16. We had what was it? IF. No, it's not that. It doesn't matter. I'll pull it up on the continuation list. But nonetheless, we've had a ridiculously strong month. And yeah, as I said last week, so right now this is the best month I've had in 2 years. I'm at $210,000 on the month. This is unreal. This is like insane. And these 2 days here, we had back-to-back 600% squeezes. When stocks are going up 600%, yeah, I'm going to do pretty well. Now, it's not going to last forever, but I'm going to try to squeeze as much as I can out of this current hot streak. And, you know, for those of you who are new, one of the things that I would say is that if you had started learning how to trade 6 months ago or a year ago, right now, you would hopefully be in a position to be able to capitalize on the volatility and the opportunity that we're seeing. A lot of people come into the market when it's hot, but when it's hot, although you may have some beginner's luck, which is fine, I mean, it's better than nothing, you're not going to be able to fully capitalize on it because you're so new. So this is really the time, in my opinion, to study, pay your dues, build the solid foundation. This hot streak is going to come and go. Things are going to slow down. And then on the next hot streak, hopefully that'll be the time where you're able to better capitalize on it. So, and hot and cold streaks, they go in cycles. So it's sort of weeks that are hot, weeks that are cold. And so you don't have to usually wait too long before it picks up again. Okay, so if we look back on the previous week, we finished Friday. Well, Thursday slowed down a little bit. If we look at my P&L for Thursday, you could see that Thursday was a $7,500 green day, or $7,200. Friday was $22,000, which wasn't bad, but I didn't feel like we had a lot of stocks that held up super well on Thursday or Friday, and I actually caught a almost $5,000 loss in one trade on Friday, which was one of my biggest losses of the month. And what happened was I jumped into this stock that it looked good, and this was NUZE on Friday. It was squeezing up, it was pushing higher, and then in basically one candle, this thing dumped. I think it was right here. It squeezes up to 420 and then drops all the way back down to 340, almost $1 a share. And I had 8,000 shares of it, and I lost 50 cents a share in an instant. And so this was kind of my little wake-up call on Friday to cool off, slow down a little bit. High volume red candles there, big rejection. There was a big seller that's just dropped it right back down. And one of the issues with NUZE was that we had a big day on Wednesday, and then it pulled back Thursday and tried to pop up Friday, but there was no catalyst. And while it's okay in a really hot market to trade a stock that doesn't have a catalyst, if it's moving quickly and it has high relative volume, doing a continuation trade on a stock is a little trickier. This was a first daily candle to make a new high, and usually these do get shorted, and it just, they don't have as high of a likelihood of resolving in the right direction. So I think I was taking a little bit too much risk there, trading a continuation setup that didn't have fresh news. So that was a little bit of a mistake. Now, if we look at some of the biggest movers from the last week, we had AZTR, which was really an unbelievable squeeze. The problem was the stock goes from $2 all the way up to $12, and then it pulls back to $4, which by itself is a pretty big retracement, right? And then the next morning, the company announces a secondary offering priced at $1.50 a share. So they really sold the stock for way cheaper than it was trading for just on the previous day, and the price came down a lot more. So at this point, that big day where it went up 600% is kind of just like a fluke. It's just like an anomaly day, and now the price is sort of back to where it was, right? I mean, the company raised money, so they got some money for that pop, I guess, but it didn't sustain. So AZTR, biggest range in the last 2 weeks, but that's not going to be tradable. So that one's not on watch for tomorrow. RGC, this one, similar to NUZE, made a huge move here, sells off, and then bounces. And in fact, I think this is a Chinese stock, which probably explains, some of the unusual price action that we've seen on it. So this one for me is also out of play. That kind of pop up and then back down and bouncing back up here. This is no good. Not interested in that. Next one down, Mira. And we're looking at the stocks with the biggest ranges first. So Mira, this one, if it came out with good news, it's possible that we could get a move. However, something that we noticed on Mira, let's look at this. So they announced this news on Thursday, positive discovery of ketamine 2 selective NMDA, blah, blah, blah. And it's like, okay, it pops up on that. But I realized, wait a second, that sounds like almost the same headline we just had the other day. So then we checked the headlines, we scroll back, and we see it's almost a rehashing of virtually of such a similar headline. So when companies are posting very similar headlines day after day, it feels like they're trying to keep interest in the stock. And sometimes I worry that there's a risk of an offering. So for right now, I'm sort of leaving this one alone, but I would say the longer it holds up, the more it could start to look like a moving average pullback on the daily. The pop up, the pullback, and then that slow creep back higher. But naturally, it has to break over 5 to get interesting, and we're down here at 270 right now. So I don't really think that we've got more action on that one. A couple of these are a little too cheap for me. Then we have SERV. This one's kind of interesting because it is pushing higher. This one had the catalyst of NVIDIA taking a stake in the company. So that gave us a big move, multiple days, pulled back, and is pushing higher. However, notice the volume declining. Super high volume on the initial day, pretty good volume on the second day, and now volume is declining. Why is that? The price is going higher. Why is the volume lighter? I think, unfortunately, what ends up happening is the excitement of the initial news headline wears off. And this was the day where it was up like 500, 600%, right? It went from $2 up to 10 or whatever. On this day here, how much are we really up? 15%, 20%? I mean, it's not nothing, but I think traders don't notice it because it's not on the top of your scans, right? Even though it made that nice move Friday, it's not on the top of the scans. You have to go down a ways to find it. So how far do you have to go down? Still not even seeing it here. So however much it was up, it gave back enough of it that it wasn't really obvious enough. So that was a problem. Serve was not obvious, and it probably won't be even if it keeps grinding higher because its percentage gains each day are going to be really small. Going further down the watch list of continuation stocks, we've got cheap ones, cheap ones, cheap ones. SLRX. This one gave us a 600% move during the week as well. It went, maybe it was 300%. This was 300. It goes from $2-ish up to $4.50 on this day here. Oh no, it was 600, I think. This is the day where it went from 2 up to 8. Really incredible. And I believe that was on no news, but it retraced by the end of the day. So what ends up happening here is you've got a lot of traders who are just excited to jump on the next stock that's moving. And let's talk about that for a second. Is that a good strategy to have? So we're going to look at SLRX. We're going to look at this chart here. So the context of when this occurred, the market is super frothy, right? It's really hot. We're seeing some huge percentage movers. This stock is already up from $1.50 to $2. So it's up, 30% on the day. It starts squeezing right here to 2 and 250. Right? So you start getting zoomed in and you see this thing pulling away. Sorry. You see this thing pulling away right here. I'm just going to put that up there. And, what do you think about it? It goes from 230, 240, 250, 290, up to 3. This is a micro pullback right there. I would say that's a spot where I want to buy that micro pullback. So the way the micro pullback works is this pops up, it dips down for a second, and then it surges higher. That's how that bottoming tail here is created, by that little dip. So it popped up, it pulled back, and then it pushed higher. Micro pullback. It's only noticeable if you're looking at the candle wicks because you don't actually even have a red candle. But yeah, absolutely. That's a spot that I want to be watching because what you have here is rate of change. So when we start to quantify, does this meet the criteria for being worthy of trading? So when we talk about stock selection, we know that we want stocks full, for my personal strategy, generally under 20, and I'll just go with kind of my standard, which is between 2 and 20. That's my preference, right? Up at least 10% on the day, relative volume of 5. Prefer a news catalyst, but in a hot market, this is the asterisk, that in a hot market, even without news, we could still see some really big percentage movers. And then float of under 20 million shares. So the float on this one, if we kind of rank it, the float was 500,000 shares. I think there was no news. The relative volume was super high. So plus here. We were up already, 50% by the time I was looking at it. And we're priced at, about $3, $2.90 by the time I'm looking at it. So this is all check. And based on the strength of the market, I think it was the right decision to trade it, even though it didn't have news. Now, one of the things that you also have to recognize is that there's a lot of people out there trading to the short side who are like, this is up 100% on no news. Let's take a starter. This thing's not going anywhere. It's got no reason to be up. So they take a starter. Next thing you know, it's up 150%. They're like, oh, shoot. Do I cover? Do I add? So they add. It's probably going to stop at 200%. Next thing you know, it's at 250%. And what are they doing? They're covering. They're like, I have to. I can't keep holding this thing. And now you get the squeeze up to 450, up to 5, halting up, right? Then dip and rip up to 7, capitulation. So this is where things get really exciting. Now, look, if you don't want to be jumping on this momentum, you're not comfortable buying these pullbacks, you feel like it's too high, and you'd rather wait for the reversal, the spot I would watch is the MACD crossover. Because once the MACD crosses over on these, and that happened sort of right about here, we often do get a fade. So if you want to short the MACD crossover with a stop either, here or at the high of the day, that's fine if you can find shares available to borrow and you're comfortable with the risk. This ended up pulling back to VWAP, right? It kind of tries to come back up, and it comes all the way from 7 down to 450, bounces up to 6 off VWAP, back down to 450, back up here, and then eventually it cracks VWAP and starts to sell off more. Now, the break of VWAP, when you get sub VWAP, you can get that trap where all of a sudden it rips and halts up. And the problem with these is that when you get these back-to-back halts, they can happen so quickly that suddenly, if you're short, you're deep underwater, and it's like this happened incredibly fast. But anyways, once we got that first big MACD crossover, it pretty much did just slowly unwind, which is not surprising considering it had no news, but it's also not impossible that for whatever reason it could have gone higher just through the effect of short sellers getting squeezed out. So my opinion right now is that we're in a market where things are hot and things are moving quickly, and the watch list of possible continuation stocks, the problem is a lot of these have now already popped and pulled back, right? So how many of these are holding their levels, even a little bit? Mira, okay, it's holding. SERV, right? It's holding. So these ones are possibilities, but I feel like we're in a market right now where the attention is really going on what's fresh today, what's new, what's squeezing up right now that has that sub 2 million share float, like this one or this one, that traders, haven't jumped on yet. So WINT, it closed strong on Friday, all things considered, right? So we look at this chart and we closed up 150%. So we had the stair stepping up, we pulled back, we came up. I didn't find this one to be particularly easy to trade. Had a lot of false breakouts. It was choppy. Double top up here, rejected, pulled back, but it is still holding up. So it didn't give short sellers that long kind of unwind into the close. Now, this did have a news catalyst. It wasn't a no news trade, but still some traders, will think it's not worthy of being up that much on the news. So it's still a good short. But when it closes strong like that, that's when we have to think about, does this have potential for day two? On the daily chart, you've got this sort of unusual candle here. It's a hanging man candle. A high volume ends up being red. It ran right into the 200 SMA. The EMA is up here around 20. So, it's a little bit funny, but it's worth keeping an eye on. I'll say, though, that I didn't trade it very well on Friday, so I'm not super eager about the fact that it's still in play, but you can't deny that it is holding up well. CREV up 46%, had that pop and then came back down, so kind of almost like head and shoulders, I think. WIBO, this one, I don't know what the deal is with this. For some reason, my chart's all funny, but yeah, light volume, super light volume. Yeah, these are lighter volume. I mean, you never know though. Like ANTE, I don't see news on it right here. Actually there was something there expected Friday. So maybe they did, I don't know. But you look at a chart like this and it's like, I don't know, I'm not sure, but if it keeps punching higher and next thing you know, it's at 50%, 75%, 100%. I'm going to be watching those micro pullbacks to try to ride that momentum to the next level because, that's kind of thing. So the way I'm trading right now is when something hits the scanners and I see it popping up, I'm doing one of two things. If I see that it matches all my criteria for being the right type of stock to trade, I'm jumping in quick. And I'm jumping in at $0.50, whole dollars, and on micro pullbacks. So what we know about a lot of these stocks is that they trade with quite a lot of respect to $0.50 and whole dollars. So, whoa, I'm flying there. So we'll just do this kind of like this. So especially this is true with stocks that are going parabolic. So for those of you who are new, what you'll observe is that, let's say this is 3, this is 350, this is 4, this is 450. So suddenly the stock pops up on the scanners down here. And when it first coming up here, it's up, plus 35% or maybe 50%. It's up enough that it's already in the top 5 leading percentage gainers. So when something is in the top 5, it's got a really good chance, if it's got momentum right now and it keeps that momentum, that it could become the number 1 leading percentage gainer on the day. And if it's the number 1, then that's going to get a lot of attention. So when it first pops up here, maybe we tap 3, and then we kind of end up getting this little tiny doji candle. We dip down just for 1 quick second, and immediately when I see a wave of buyers coming in, I'm getting in right there for the break of 3. And usually on my very first trade with like 5,000 shares, I might get in at 290 and sell half or the whole thing at 310 and look to see what it does. Because sometimes they'll retest 3, and you want to take that 10 cents first. And then if it pushes higher, I'm back in at 310 and looking for 325 and 350. We come up to 350, taking a little profit. Now, if this is a case where it breaks 350 immediately, once it's over 355, 365, I'm looking for acceleration up to 4. And that's when we're starting to go parabolic. And then if we don't pull back here and we hold 4, I'm looking for that straight up squeeze. And this is where the candles start getting bigger and bigger and bigger as we're just blowing through these levels. So, how you trade something going like this, for me, is with a lot of respect to what it's doing around the half dollars and the whole dollars. Is it hesitating, or is it breaking them with some real confidence? And looking for those pullbacks where we get a momentary dip, you see a moment of red selling on the tape, there's a little profit taking, and then does that continue? Because if it continues, then we're just going to start to unwind, right, and come back down. And maybe it'll give another setup later, but for right now, it's coming back down. But if it's just a moment of selling, and then right away I see more green on the tape, that's when I'm thinking, all right, there's some real sentiment here that's bullish. I'm going to jump back in. So when I see that, I then jump back in. And that's kind of that's the way I trade these. I'm watching the tape, I'm watching the level 2, and I'm trying to visualize and sort of understand the sentiment. And I'm able to obviously decipher a lot from all of those numbers based on green or red and the prices and the order size and everything else. And again, I think that's one of the reasons that it's so great to be part of a trading community, whether it's Warrior or you choose a different community. It's up to you. Do whatever you'd like. But if you're part of a community, then you're able to sort of piggyback on other people's intuition, their educated intuition that takes years to accumulate. That's what I needed when I was getting started. I wanted to be around traders who knew everything I didn't know, right? Who knew what they were talking about, who could see these sellers, who could spot these areas of resistance, who could say, yeah, be careful here. There could be a false breakout. And look, I'm going to take everything with a grain of salt. I'm an adult. I have to make my own decisions, but I would much rather surround myself with people that have been doing this for a long time and really know what they're talking about than just to do it by myself, or even worse, surround myself with people who think they know what they're doing, but are not even very profitable, because that's not going to be helpful information. You have to be thoughtful about the content and information that you're consuming from other traders. So if I'm thinking on Monday, my game plan, yes, I've got SCRV on side chart. I've got Mira on a side chart. So those are over on monitor number 2 here, just basically sitting. It's possible we could get some action, but I don't think there's a high likelihood that either will become the leading percentage gainers, because they're already up too much in the last couple weeks. Mira has a better shot at being up 40 or 50%. Serve, it would have to go to $26 a share to be up 100%. I mean, I just don't think it's going to happen. So those ones are going to sit on the side chart. Of course, I'm going to keep the S&P 500 up on a side chart as well. The overall market, we have pulled back, which is kind of interesting because, you look at the month of July for the S&P 500, and right here, let's see. So this is the beginning of July. We had this sort of, first couple week and a half, nice, and then this sort of bigger sell-off. So some people are, like, oh my gosh, the market's doing so poorly. How are you doing so well? And generally, I feel like the market is still within a very acceptable range. It's down a little bit, but it's nothing crazy. It's not like we're down 30%. We're near ascending support, more or less. I mean, I just don't think that the overall market is doing anything that's exciting enough right now that it's going to send shockwaves through the rest of the market. So, I keep the S&P on watch. If we have big red days, I'm aware of that. But for the most part, I don't usually think, unless there's something really significant happening, that's going to have a big impact. I think really the bigger effect for whether or not small caps are moving, it's kind of like, it's just the cycles of emotion in the market. After you have something like Zap or Mira or whatever that make big moves and keep holding up, short sellers get more cautious, long traders get a little more greedy, a little more aggressive, and that kind of swings the pendulum to the side of the bulls. And then, we'll start to get, at some point, we'll see more round trips where stocks will pop up, they'll come all the way back down. And now shorts are going to get more confident, bulls are going to get more cautious, and the pendulum will swing that way. To be honest, through a lot of 2023, the pendulum stayed in the side of bearish. The market was in a bear market in 2022. 2023, we kind of, were rallying out of it, but the sentiment was still really tough. So this last month, both the month of February and this month of July have been the strongest, bull market sort of windows that I've seen in small caps since 2021 and 2022. And no doubt, I'm going to try to capitalize on it as best as I can. So what does that mean? Well, when the market's hot, I'm going to just increase my share size and my frequency of trading across the board, basically. So one of the things that I think is really interesting, and I'll probably do a breakaway episode on this topic, is during the bear market of 2022, and that carried through 2023, I sort of had two choices. I had crushed it so hard in 2020 and 2021, and 2022 was still a pretty good year and the first half, that I was every day, I still had, I think my daily goal was $20,000. I mean, I still had a really aggressive daily goal. I was thinking $1 million plus years and just absolutely crushing it. And when that just kept not happening, I realized that continuing to set the bar that high was demoralizing. It was, I was just getting really demotivated because I was like, I keep falling short of this goal. And I got to a place where I kind of had to either keep doing that and keep being disappointed and getting really frustrated and having big losses, or sort of submit to trading the market that I was in and trading with smaller size. And so I brought my size way back down. And so for 2023, you guys saw that I was trading with much smaller share size. And some people were like, Ross, I don't get it. You were having $200,000 green days back in 2021. And I was like, yeah, that was 2021. That was when the market was insane. We were having 600, 1000% movers, every couple of weeks, if not more frequently than that. And I got into the groove of every time I sort of saw it starting to happen, I would size up with 15, 20, 30,000 shares, $5 a share. Next thing you know, you're up 150 grand. You do that a couple times a month and you're having a $500,000 a month. It's crazy how quickly those profits can add up. But we weren't seeing that in 2023. And so I sort of just said, I know, but in this market, I've got to trade more conservatively. And so I brought myself way back down and I traded much smaller size. But in February of this year, we had some good volatility. I was up over 100 grand and I sized up as we saw those opportunities. I have no problem sizing up when we see really good opportunities and we're seeing sustained momentum. And here in July, seeing sustained momentum. So I'm sizing up, which means I'm taking larger positions than I was taking last year, certainly. I'm still starting generally each day with 5,000 shares, but maybe 7,500 on my first couple trades. I'm still trying to keep it tight on those first few trades so I don't go deep red. But as soon as I've gotten a cushion of $1,000 or $1,500, I'm taking 15, 20,000 share positions and I'm ready to step up to the plate. Now, I am obviously measuring the shares I'm going to take based on the price of the stock, the spreads, the slippage I might get. There's a lot of factors that come into play. But when we're seeing something like SLRX, that, and that was right after AZTR, I'm definitely going to trade these more aggressively. So my thought for the coming week is that if we see stocks that are pulling away, what we may see is, news at 7 a.m., like something like this, and the stock pops up, like kind of a big pop, and then like comes like almost all the way back down. And these are spots to be really careful, because if you take big size and there's no volume, you're going to have a hard time getting in. You'll get slippage on the way in, you'll get slippage on the way out. But then, when they kind of come back up like this, it's not it's not a typical pattern, except in this market, all of a sudden we're back through the highs. And this is where it starts to get more interesting. So you sort of have that initial pop and drop, let it shake out, and then determine, is this thing going to keep going? Now, not all of them do, right? Because some of them end up coming back down and selling off, and then that's that. But the ones that hold up, that's what I really want to pay close attention to. So really, my focus tomorrow, and probably every day this coming week, is going to be looking at the leading percentage gainers, which is on my Day Trade Dash software right here, and looking at the floats, looking at the news catalysts, analyzing the charts, and trying to ask myself, is this the stock that's showing the potential to go up like 300, 400%? Does it have the right combination of price action, float, everything else? And if it does, then I'm just going to trade it aggressively. I'm going to trade it more actively. I'll buy the dips. I'll just keep actively trading it until we get clear signs that I should walk away, such as MACD crossover, a break of VWAP, or some really big jackknife rejection candles. No doubt, it's true that when you have a long stretch of solid green days, which I have right now, and I'm not counting, I don't know how many green days I have in a row, it doesn't matter. But what's noteworthy is that when you have a nice long stretch of consistency, it certainly speaks to the fact that the market is working really well for your strategy. But that can also be a time where you get complacent, you get sloppy. And so I need to be able to be quick to size down on days where it's a little slower, like right in here, right here, and then size right back up the next day, then size down, then size up. And maybe I'll be sized down tomorrow. It'll really depend on what's right in front of me, right? Mondays haven't really been the blowout day this month. It's been more Tuesdays and Wednesdays, but doesn't matter. I mean, we could have a great day tomorrow, and I'd be happy with that too. So I have to be able to be aware of the fact that it's very easy after a long hot streak to have a big loss because you get sloppy. So what I'm doing is to keep myself kind of mentally sharp, I'm trying to get a little extra sleep each night. So when I sit down in the morning and I'm thinking about taking 30,000 shares of a stock, I'm sure that I'm really clear-headed in that thought process. I'm waking up a little bit early. So I'm going to bed a little bit earlier and I'm waking up just a little bit earlier, but I'm trying to get a little more sleep in total. But I'm waking up a little earlier so I can be here and kind of have sat down and opened my eyes and looked at things before I'm taking my first trade. And at night, I'm doing my meditation. So I'm doing my meditation at night, and I'm also doing the sauna just as kind of like part of my practice right now of keeping myself really mindful and in touch and grounded. So the second things aren't good, I'm not going to get stubborn. I'm going to step off. But I'm going to do all those things, and I still know that there's just the high likelihood of slipping up, because that's what typically happens. So I just have to be careful when that first red day comes that I don't let it become a $30,000, $40,000 red day and give back that really, those really big green days from last week. I got to just keep the red days as tight as I can. $3,000, $5,000, not more than 10,000 if I can help it, right? Just really try to keep it tight. And I should be able to help it as long as I'm able to have discipline. It all comes back to discipline. So that's where I'm sitting right now, thinking about my game plan for the week ahead. I hope this has been helpful for you guys. I did upload a couple new episodes, which I'll post recommendations to here, and over here. And if you haven't already done a 2-week trial at Warrior Trading, would love for you guys to check it out. We don't let people do repeat 2-week trials, because during your 2-week trial, we actually lose money because we're paying more in market data. And it's especially true actually here right this week, because we'll pay your market data for July and we'll pay it for August if you're on a 2-week trial right now. So we want to give you a chance to have a preview of the platform, but the platform is not free for us to run. And we ask you to pitch in a little bit, but we still try to keep it small enough that it's easy for you just to give it a try, but it's not something where we can let you guys just keep doing these trials again and again and again and again, because it's losing us money to do that. So it's a chance for you to get a preview of the software. And if you like it, I hope you'll become a member. And, if not, that's no harm, no foul. At least you gave it a chance to check it out. So just so you know, we'll block people from doing these trials again and again, just because it's not the way it's designed. So I hope you guys check it out if you haven't already. And thank you again for tuning in for today's episode. I hope you're subscribed to the channel, and I'll see you for the next upload real soon. It'll be